everyone, and welcome to what is for David and us our third webinar of the day, and for many of you I know here is actually your first, where we'll be looking at the American markets, day trading the American markets. But first of all, also like to apologise, we are a little bit late. We got sort of sidetracked, as David said, yes, one eye on the cricket, exactly. We're having some landscaping work done. You were. Also having some landscaping work done outside, and it's just fascinating to watch. It's great watching other people work, isn't it? Especially when we're doing something that we really enjoy, like trading the markets. Anyway, before we start, as usual, please may I draw your attention to the disclaimer that I know you can see on your screen. Trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Right, very quickly, here we are, myself, David. We're going to be looking at these markets through the prism of volume price analysis and using our quantum trading tools. Now, volume price analysis, you can find all the details of the methodology actually in the book. The books are plural, that are on Amazon, and it's the methodology David and I have been using now for, as I said, must be over 20 years. Really proud of the books. Lots of 5-star reviews, lots of nice things said about the book and the methodology. But it's not for everybody. There are some 1-star reviews, 2-star reviews, and I'll leave you to go and read some of the comments on Amazon. But you know, hey, actually the book actually begins with a sentence saying the VPA is a bit like Marmite, and if you don't know what Marmite is, it's a delicacy we have here in the UK, and you either love it or you hate it. But all I can tell you is that traders of every level of experience, from novices right through to people who handle millions of dollars and pounds of other people's money, who have incorporated elements from the VPA methodology, obviously volume is one, have emailed me, have told us that it's that little missing link, if you like, in price action. Price action will get you so far. I really, we can't deny that. But when you combine it with volume, then you really, as they say, the old cliche, it will really give you the edge. But VPA is not just price action and volume. It is looking at patterns, chart patterns, candle patterns, it's individual candles, it's support and resistance, which is hugely important, and of course, time. And in fact, I've got a chart I want to show you precisely what we mean by support and resistance and how we incorporate it into VPA. And we'll have a look at that in a second. The book is now bundled together with a book of worked examples of the methodology, and it's just a way of looking at charts, picking out those, the examples, if you like, from the methodology, and the book that accompanies this is the box set. It's a digital box set. As I said, there are over 200 worked examples focusing on stocks, but the indices are in there, and there are some commodities. There is also a forex version, but that is in another bundle. And what we've also developed is we've developed a set of indicators. Oops, gone back over there. That we call the quantum trading from our quantum trading software company to help day trade, and we have a forex tools as well. But in this session, we don't really look at those tools. We focus on the ones for, as I said, the futures and the cash markets. And the part of the tools that we have developed are for non-time-based charts such as Tick and Renko, and also tools. You can buy the indicators at quantumtrading.com. This is here. You can buy one, you can buy a bundle, or this is the package that we've put together that we've developed specifically for day trading. This is just for Ninja. This is the Ninja Trader version. In fact, it's the only package we have for Ninja Trader, but we are working on TradeStation, and there'll be an equivalent package for TradeStation as well. There'll probably be more indicators for TradeStation, because one of the advantages of buying a package from us is that when we develop new indicators, they're automatically added to the package. And On the volume side, we're looking at something called delta volume, and delta volume is really leveraging the difference between the bid and the ask to get a feel for what is buying and what is selling. But that's something we're looking at. And we're also looking at possibly developing an indicator of using the information that's given on order flow. But that's something that's in the program at the moment. Quantumtrading.com is where you will find details of all the indicators, not just for Ninja, but for MT45, TradingView, and as I said, the platform we're working on at the moment is TradeStation, but there won't be anything about TradeStation on the site yet because all the indicators are still in development. And finally, my own site, annacooling.com, is where you can catch up on my analysis, and there it is analysis pretty much across the markets. A lot of stock analysis, commodity analysis. The Facebook side is dealt with through my Facebook pages, but they scroll through the front page of the site. As I said, it's all there. You're welcome to go and either agree or disagree with the analysis that I put up. What we try and do is, for example, on the stocks, we do an analysis, put it up, and then we'll revisit it and see, did it actually play out as it is? And there've been some really interesting stocks that we have been tracking, I think, since the beginning of the year, haven't we? McDonald's being one of them, but it's great because VPA is where you will see how it plays out and what it's telling you, and what, more importantly, it helps you anticipate what is likely to be happening next. Because I heard a great, I came across a great expression earlier on today, and basically a fellow trader said that trading was as much about handling and managing uncertainty, the uncertainty of the markets. And I thought that was a really nice way of explaining what we have to do in trading. Right, I just want to stop there and pass over to David. I'm going to cover this chart. This is actually the pound CAD. We're not going to look at the Forex market, but I want to look at it through, I want to explain a little bit more about how support and resistance comes into your chart analysis, and also phases of consolidation, congestion phases, because it's just a fantastic example of Wyckoff's second law, of course.
I don't think I've got a great deal to add to that. Sorry, I was just flip-flopping between screens here. I'll be quite honest, I've got cricket on one side and I've got the trading on the other. So apologies if you're not a cricket fan, but for us in the UK, it's quite exciting.
Especially playing Australia.
Yes, especially when you're playing the Australia. I was going to say the old enemy, but you know what I mean. It's I think there's no love lost when it comes to sporting between the two countries. Anyway, good to have you along. Nice to see you. Any questions, just drop them in the chat box. Happy to answer them there, either on air, if they're longer ones, or shorter questions in the chat box. I'm going to pass back to Anna. I've got all the indices running. I've got commodities, and we will see what we can see. Bear in mind, however, that we have the Fed chair, who is at the Senate at the moment, due to start at 3 o'clock, so presumably he's underway. So keeping an eye out for any volatility, what may or may not be said. Where are we? There we go. Yeah, Fed Chair Powell testifies 3 o'clock our time. So, he's there saying whatever he's saying, so it won't be a surprise to see volatility, particularly in the in equity markets. Anyway, we'll keep an eye on that. I'm just going to pass back to Anna, and we'll get going.
I think Joe Powell's already done what he was tasked to do by Donald, basically put a bit of oomph into the stock market, and we've had all sorts of fresh highs, haven't we, David? 27,000 in the cash Dow, the S&P over 3, but the NQ's not over 8 yet, is it? So these are really very, very important numbers. Before we go to the charts as well, something I'm always fascinated by statistics and curiosities, as it were. And you might want to. I'm going to put this up as a link on one of my. In fact, I have on the Trade Stocks Facebook page, but you might want to scope it out yourself, because in the stock market at the moment, I mean, as you know, for investing purposes, a lot of investors, they just use a tracker. So they put their money into one of the tracking funds, and it kind of, you don't have to think about it. You don't actively manage any portfolio. And of course, the trackers have done phenomenally well, because, you know, this is the longest bull market, I think, ever, is it now? I think a few weeks ago, this is the longest we've had since the financial crisis of 2008. But when you actually dive into the indices, it says here 77 giant companies are responsible for global stock markets at record-breaking levels this year, which is actually extraordinary, because what they're saying is the other 11,000 stocks are actually struggling, and they still haven't made up the losses that we saw, if you remember, just before Christmas, and that was after a Fed meeting when, in fact, they raised interest rates. Now, going back to Jay Powell, he's done his job. He's told signal to the market that, yes, don't worry, the Fed has your back. Cutting interest rates, of course, if that's what the stock market and Donald want. So really, I think his testimony today, I don't think what else he's going to add to that, really, is he? He's done. Job done, basically, cross it off. Anyway, getting back to the pound CAD charts, ignore the fact that it's the pound Canadian, because this could be anything, and it could be any time frame. In fact, let me go up to the daily chart, and this is just a wonderful expression. I need to reduce that down. It's just a wonderful explanation of Wyckoff's second law of cause and effect. In fact, in VPA, in the books, and certainly in the Forex program, we do call on the fantastic work that was done by Richard Wyckoff. We take a lot of the principles, we take the three laws, and wrap it around other things that we've put that make up VPA. And one of them, for example, is using candles. Candlesticks, it's not something that Richard Wyckoff or any of his contemporaries would have used. It's not that long ago since candlesticks were used as a means of chart analysis. But second law, what is it? Cause and effect. It basically says that the longer something stays in what we call congestion or consolidation. This is the daily chart as we see here. Once there is a break away from that congestion and consolidation, the bigger the effect. So you can see here, this consolidation phase for the pound Canadian actually started back in February and lasted all the way until the beginning of May. Now that is a long time, and you can see here it very, very clearly traded within a range. Now, on the faster time frames, I'm sure there were plenty of opportunities to trade this pair to the long side and the short side. And it is these phases of price action that sometimes frustrate traders because there is no direction. And this is actually a consolidation phase with not a lot of volatility. There are wicks to some of the candles, but generally speaking, there's certainly no huge volatility. Isn't lots of whipsaw price action, but the range is very clearly defined. And what it is, what it means is the market is not ready to move in one direction, firmly in one direction or another. Now, we've developed an indicator called the volume point of control, which is this yellow line here. This actually picks out the area on the chart where there has been the greatest volume, what we call transacted volume, in the sense of this buying and selling, where there's no divergence. A trend is, if you like, it's a move away. It's a divergence from the end of a downtrend and the end of an uptrend, but also when you have the end of a consolidation phase. And this is where patience is required. Now, if this were a stock, for example, and you saw a stock moving in this way from February to May, if you're an investor, you would be well advised to stay out of it until you had some clear signals that the stock was going in one way or direction, because hey, you're going to put a lot of your money into it. The other way to play a stock that's moving in this direction is with some kind of option. And certainly when we were doing covered calls, we would actively be looking for a stock that presented this phase of price action, but we would look at it with a kind of a mildly bullish tone, because what we would do, we would write calls, we would collect the premium, we actually owned the underlying stock and kept the stock. And I think apart from 2 occasions when the stock was never called away. So it's like owning a rental on your stock. Traders, as I said, there are option strategies that you can apply to stocks. I mean, if you go on to Nadex, you can they've got plenty of options, if you like, that you can use when you see, and you can use Nadex also for the forex market, for any market. But generally speaking, intraday traders, this is, you know, you would have to be patient and wait for a move away from, as I said, the volume point of control. This is the 3-minute chart, and this is what I mean. This is the move higher that we had earlier on. At that point, the VPOC was down here because the VPOC moves in real time. Let's just scrunch that up a bit. Here we are, horrible, choppy price action, and certainly preceded, you know, when we had the breakaway, we had a very, very nice breakaway, but now we are having exactly the same. We are replicating what we see on the daily chart, and this is what we mean by price action being self-similar, in the sense that it doesn't matter what the time frame is, you will see the same price action, the same phases of price action that you see on the monthly chart, weekly chart, as I said, right down here to the 3-minute chart. And looking at so this is where we have to look at support and resistance levels. With the support and resistance indicator we have for MT45, these solid lines here, when it's a solid line, you know it's a strong region. So there's a line to the top, it has been pierced, but it hasn't managed to close above. So that's 64.03. And what is it to the downside? 63.83. The trend monitor is just chopping about. As you can see, it dips in and out of these colors, simply because this is, for the present, this is not going anywhere. And when I said earlier, you also need to look at a non-time based chart. This is the move higher that we considered using a Renko. And this is what it's doing now. It's going nowhere for the time being. Now, when you see a chart like this go up to the 30-minute chart, we're building a consolidation phase even on the 30-minute. Lots of spikes, wicks to the candles. What's interesting here is this level, which is the R4. Now, haven't introduced the Camarilla in this week. We'll look at it next week, but the R4 level on the Camarilla protocol is hugely important, because a close above it can be considered to be a valid breakaway, but it certainly can't close above the R4. Our indicator of Camarilla is actually based on 6 levels, and the next level will give you what the potential target is. What happens with the breakaway, certainly on the R4 and S4, is often you'll find the price will actually break through, but then it'll come back, and oftentimes it will retest that level before deciding to move further. But the level we looked at from this morning, from earlier, 64.06, which is on the 30-minute chart. So see how many times it's been tested. 1, 2, 3, 4. It just cannot seem to get through that. If we go up to the hour, here we are again. We've got 64.08. It's 64.06, 64.08. We're there or thereabouts. So we've got some very clearly defined resistance levels and support levels, and really, you know, right across the time frames, the watchword here is patience is required. But it doesn't matter whether it's a pound count, it doesn't matter whether it's a gold chart, whether the principles are identical. Now, this sideways price action is a little bit more volatile because we've had the volatility indicator triggered on these candles, which makes it, you know, you would really, the moment it's very much hands off on this chart, we really have to wait until one of these levels is taken out with a lot of volume. A reasonable amount of volume in the candles underneath. You can't sort of say in a congestion phase there is no volume if you look at the volume under here, as it were. But you know, there's not enough to move it in one direction or another. It is in a consolidation rate. It may continue for the rest of the session, may even continue until tomorrow. And if you look at the daily chart, what are we actually seeing? Let me just take the change the template on here because it's confusing. This is, as I said, this long trend down from the daily on the daily chart. In fact, that was a clean break away from the volume point of control. It's really trying to base, the pound CAD is trying to base at this level. Where is it? 63.36 after this long downtrend. We're really not going to see a V-shaped recovery from here. So if you like, the daily chart is telling us it's reached a point of pause, maybe of exhaustion. You're not going to have an immediate reversal. You're going to have a congestion. So you've got congestion building on the day, and that is what you are seeing on the faster time frames as well. Right, can I pass over to you now? Oh, all right, fine, okay.
Sorry, my connection's dropped out for some reason.
Has it? Oh, okay. Just waiting for David's, for some reason, is your internet broken? Broken down? Okay. If you've got any questions, please just put them into the chat box and I'll be more than happy to answer them. And one question with regard to one of the questions we get asked all the time is people have a lot of in VPA, what we refer to as a buying climax and what we refer to as a selling climax is actually the opposite of what most people understand. So, for example, after this long trend downwards and to the downside, we would be looking now for a period of accumulation and a buying climax. And often other there are other ways of looking at the relationship between volume and price, because we look at the charts from the perspective of the insiders. We don't look at it as if we were as the trader or investor. So it's all explained in the book. So, for example, are you back? So, for example, this is now accumulation, but it's accumulation by the insiders ahead of selling out to people like us. Is that right, David? Yeah. So it's accumulation, distribution, buying climax, selling climax. Some people, you could even say it's supply and demand as well. It's all semantics. Essentially, you have to look at these charts and put yourself in the place of the insiders. You're in charge, you're ruling this market. What are you doing? Yeah, are you selling out or are you buying? And what you do is you sell as the price goes up, and you really try, and then you catch people at the top, and then you force them to sell to you. So you'll buy back, so you can push the price back up again. Right. It's once you get your head around that, it's actually quite straightforward. Are you ready?
Sorry about that. I always find it a little odd that my internet drops out, and yet we've got hardwired Ethernet here. So I quite understand that, although it is driven by a Wi-Fi connection, but that's also hardwired in, so maybe it's the weather, who knows. Okay, while Anna's been talking, I've just been tracking what's been going on in terms of the three principal US indices. I'm just on the workspace with all three of them up. I've got the YM on the top left, NQ in the middle, and ES on the right-hand side. These are all 5 minute, and then down the bottom I've got the daily charts as well for the equivalents. And what's been interesting certainly over the last couple of days is that the price action in the NQ has certainly been more pronounced in terms of yesterday was certainly a great day, really nice price moves, and indeed the day before. And when you actually contrast that with and compare it with what went on in terms of the YM was choppy, it's far more difficult trade, whereas the NQ was more straightforward. It doesn't always work out like that. And what's interesting today, actually, just pulling that back up again, the YM, we've had better price action on the YM today than we have on the NQ. So we've got the reverse of that going on today. So the NQ is very sluggish, the YM is a little bit more active. The price profiles are pretty much the same, but if you're an intraday trader, just have all three up somewhere or the other, and just consider it from two perspectives. First of all, to get a sense of which one is perhaps moving with a little bit more momentum. And secondly, it just gives you a different perspective when you have them up like this, in terms of, certainly from an intraday perspective, but anyway, it gives you a different perspective on price action and volume. It just helps to reinforce what it is you're doing. It's never very clear as to, we've seen the NQ leading a lot over the last, certainly the last few months, last year as well. And you've also got to consider the broader economic cycle, certainly as far as the NQ is concerned, with regard to tech stocks and where they sit in the economic calendar, or the cycle rather, and at what point they are likely to perform better or less well. So I'm just tracking what's going on. A little bit bearish at the moment. It's just, what I've done is I've got the YM, just got the YM on the multiple time frames. There we go. Just pop that up. I've got the 15-second running again, which is just nice from various perspectives, not only as an intraday scalper, but also if you're learning VPA, it's a great mechanism for learning VPA very quickly, because everything comes through at such speed. 2 minute here, 5 minute, 10 minute, 15 minute down onto the daily at the bottom right hand side. There's a lot of VPOC evident at the moment with the yellow dashed line, which you can see here. So, you know, there's a lot of congestion going on, as Anna was saying. Another example here, been trading around this for, what, 20, 30 minutes now. Volume point of control, very, very strong platform of support in underneath here. This one is, well, it's oscillating around it at the moment. It's very hard to say whether it's support or resistance, because it's pretty much bang on the price action. But certainly below the volume point of control here, you've got two levels here. And if the market breaks to the downside and goes anywhere down to 940 odd, then you've got three pretty solid barriers in place overhead. And below, you've got pretty thin volume falling away as it does as you get down the, let's move that out of the way, as you move down the chart. To the upside, obviously it works the inverse. If we break to the upside through 970, then you've got some low volume node here, which has got 10 points in it. Little bit of an increase in volume, but if you get up to this level here, it's pretty thin, which is what you would expect to see. We've tried to get to 27,000 on a couple of occasions. All these numbers, 27,000, 26,500, the hundreds even, the 250s, they're always big numbers. Certainly 27,000, when you get to one of these, you can almost rest assured that the market will congest at that point, purely because it's such a significant level for lots and lots of different reasons, that that's the expectation. Similar sort of expectation when you get to 26,500 or 26,750. Round numbers, everybody loves round numbers. Everyone places their orders around round numbers because we're all lazy. We don't like going 3s, 5s, 7s, whatever. So we all stick a naught on the end because it's so much easier to do. It's true in professional markets as indeed. I'm not saying ours are not professional. I'm just saying that the guys who do this every day in the markets, that's what they tend to do as well. It's just laziness, to be honest. You can see this level. It's as I say, it's pretty strong. This is on the accumulation distribution indicator, and what that indicator does is working on price. The number of times a level has been tested or retested, then the stronger this grows and the wider the band gets. So the wider these lines, the more significant they are. So these are very strong, very powerful. And where you get clusters of them here, this is a really dense region at the moment. Works in all time frames. Let's just see what's happening on some of the other time frames. Let's go down to 10. As always, 2:30, the cash market opens and we get this surge in volume, accompanied, generally speaking, with a lot of volatility, as an awful lot of whipsaw price action goes on around the first sort of half an hour or so. Generally, to be honest, I don't pay much attention to it because I just wait for the markets to settle and just get some general direction. But at the moment, we're still oscillating around there. I don't know if Powell is still speaking or whether he's done and dusted now. He's done his bit. I mean, he did it the other day anyway. There isn't, as Anna said, there isn't a great deal you can add to that, unless he, of course, changed tack completely and decided that made a bit of a faux pas. And yeah, I was lying. It was all a joke. I don't think he'd do that, to be honest. Oh, is it a Q&A? Okay. 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 Well, there we go. Okay, down onto 15. Lots of volatility, big spikes above, lots of, some buying coming in there, lots of volume, up to the upside, selling out again, whipsaw around. And a lot of this price action is based on the algos. It's not so much in the YM, but certainly as far as the ES is concerned. So the price action there will be very whippy, driven largely, as I say, by the algos. And what Anna was saying earlier on, different chart, but the principles are exactly the same. If you're going to trade a breakaway like this, it's a question of being patient. As I said this morning in the webinar, these are low risk propositions purely because once the price action moves away, first of all, it's confirmed with volume, but more importantly, once it does move away from these regions, you have got some very, very strong barriers which protect you against reversals and which also give you major protection for your stop loss positioning. So that it's a quid pro quo. If you can be patient and wait for them, then they are certainly, I would say, the lowest proposition trade that you can possibly make. And if the chart gives you a clear run below or above as to what you're taking, this example, if it breaks the downside, what have we got? Well, we've got very light price resistance, price support coming into play here. Should go through that relatively quickly if it broke the downside, and the volume profile's falling away. So it's a question of looking up and down the charts. That's on 2 minute. You go up to the 5 minute. What have we got on the 5 minute? If it breaks the downside, again, not very much. So, you're looking at a pretty clear run down to somewhere down here. So the question you've got to say is, well, is 20, 30 pips enough, 20, 30 points enough for me on this particular index? It may or may not be, depending on what it is you're trying to do and how much money you're laying out on the table. Go up onto the 10 minute, do the same exercise. What have we got? Very light, really. A lot of volume, obviously. This is, let's just pull that back a bit. A lot of volume in here. So there is a lot of volume potential resistance to a move lower, certainly from on the 10-minute chart. Price-based potential support, very little in here. This is pretty heavy down here. This is substantial. So, at that point, the market would almost certainly pause at that level. So it's just up and down the charts all the time. Look at what they're telling you. Is this an opportunity? Is it a low risk? What's in the way? What's going to cause the market to pause if I get into this position? And then you make a decision based on that as to whether the opportunity that the chart is presenting is enough for you in terms of clear water availability, or you just pass on and move on somewhere else. Let's go back up onto 2. Really strong platform, but we're still trading around the volume point of control here, waiting for something to develop. Pull that back out, it looks horrible. In terms of let's go up onto the dailies. In terms of the dailies, it's all coming up to, it's very toppy here. It's very, it's got that sort of nervous feel about it at the moment. If we get through 27,000, and it's always like this when you're breaking into new high ground, making new highs, etc., markets are always a little bit nervous. Okay, now we might have got a bit of a move going. Let's have a look at these. Move over onto the ticks very quickly. I've got the ES on the ticks. Where are we? Can't see it. There we go. That's it. Drop that out of the way. This is all fairly sluggish, so hopefully this will pick up a little bit. These numbers here are relatively low for the ES. Certainly this is okay. Expect to see this up 8,000, maybe something like that. But on the tick charts, you get a sense of momentum. You don't see that on the time-based charts. But let's go hop back onto the time. Okay, what have we got going? Okay, decent volume under here, decent move developing. We're starting to break away, break to the upside. Okay, we're through here. We've got light volume here. So, where we're going to run to? Well, we could run all the way back up here. It's 20 points odd. Trend monitor starting to transition. Decent volume under that one. Hitting a bit of a weakness here. You can see, decent volume. Market wasn't going to go very far. Selling under this candle again. So, it's a bit weak. It's still weak, but it's got some. It's starting to develop some bullish sentiment. It's got that sense of wanting to go higher, Whether it goes higher with momentum, we will see. Starting to see that transitional in the trend monitor. This has already transitioned. This is starting to develop. This hasn't done anything yet. We've got a little bit of it coming down here as well. Okay, see how we get on with this one. Low volume under that one, so you know, selling pressure's died away. Pretty weak response on the up candle on that one, but it's okay-ish. Got through this level here, and we seem to be getting through this level here. If we get through this level here, then we've got some half decent protection underneath. Okay, going for another leg up. Okay, that was okay. Decent volume under there. That's nice. Nice little wick to the underbody and a decent body to the candles. That's fine. So we're moving up nicely now. Okay, 85. Okay, so we're in some decent points now. Okay, volume's fine on that. Maybe a little bit high on that one. Let's pull that up full size for you there. Okay, that's okay. It's just a bit compressed. That looks all right. That's fine. Nice pickup in volume. Trend monitor's bright blue. You'll see the trend line here, which is part of trend monitors picking up the angle, is also driving higher as well. Well away from this now, moving up nicely. Decent trade opportunity. Looks good. Now we're coming up to the dear old 27,000, so expect it to pause at that point. If for no other reason, it's this key number. Okay, decent volume there. That's okay. That's good. Fine. We've got some nicely rising volume and rising price, which is good. Now we're coming up to a little bit of resistance. This is actually quite strong up here. You know, it tried here earlier in the session and came off there. So we're just going to have another run at it. This is 5 points below 27,000. Going up nicely, a little pivot forming there to the upside. Okay. See if it's going to top out of that level again. And when you get to these levels, these big numbers, and you see this to the left-hand side, you might say, okay, fine, well, I've taken 10 points out of the market. That's it. I'm going to close out and just see what happens. Because once it gets through here, you're into clear water, but then you've got the 27,000 to deal with. So, you know, it's horses for courses. It's what you feel comfortable with. Bit weak, that candle. You can see it here reflected here. And this is the beauty of using multiple time frames. That is as clear as day. Big wick to the upper body, narrow spread, in fact no body at all, and decent volume under it. So what are you expecting? Reversal, which is what you're getting here, but it's a lot easier to see it over here. You know, you put that group of candles together, it's probably around this sort of area. It's all right. It's in this case, I suppose it is fairly self-explanatory. You've got a rally and a fall, but it's much easier to see it on a slightly slower time frame, and also, of course, you get the different volume profiles with it as well. So we've had the rally looking very weak, topped out at that level, which we saw was in the way. So we're not surprised, and a decent volume under it. So we're expecting a bit of a pullback on that particular move higher for the time being. That's not to say it's finished the rally. It's just pausing. It's just a little bit tired. It's a little bit weak. It hasn't got great strength. Now what you're seeing is quite interesting. You've got some falling price here, and you've got some falling selling pressure under it. So that selling that came in, you could say, well, it's profit taking maybe. Let's just see if that develops into a further move higher. And you want to see a decent up candle with some decent volume under it. Flatlining at the moment. And this style of trading doesn't suit everybody. Trading in and out the markets at this speed, not for everybody. The only reason that presented in this way is just to give you an understanding of volume price analysis, of using multiple time frames, how the indicators work, and putting it all together. And this is just the way we do it. It's not the only way, but it works for us, and you know, hopefully it will work for you. And there's absolutely nothing wrong in tailoring it to your own requirements, taking bits of it, putting it together. A lot of our customers take certain indicators, then they wrap them around other approaches that they use. Absolutely nothing wrong with that at all. You can see here the transition. Bear in mind, this is 15-second. We've got into darker blue, into darker red. Be interesting to see if this transitions through into brighter red, or it's going to come out the other side and go back into darker blue and then up into bright blue again and pick up the bullish sentiment once more. This is remaining blue. This is still in a transitional phase. We've gone into darker blue over here, waiting for that to revert into brighter blue if this is going to continue higher. Just head back onto the other indices, just see what's going on there in terms of the other two. It's the YM. This is the NQ. So yeah, they've had a little bit of a pullback. They're trying to rally, but it is very feeble. You can see here on the daily, this is very thin price action, thin price action. This is what we're seeing on the YM at the moment. A little bit more developed, but nevertheless, they're all a little bit nervous at these levels. We did a post yesterday or the day before, I think, on oil. It was trading around 59.50 odds, and we said it was looking to get through this level. In fact, it got to that level yesterday, largely on the back of there was a big draw in oil shortly after we did the post. I think it was yesterday anyway. I've got through this level. This is now acting as a support platform. Relatively low volume, and looks as though we could be climbing back up to the volume point of control on the daily chart for oil. Gold is a very technical picture at the moment, very difficult, very tricky. Probably be writing about that in the next couple of days or so. And silver as well. Let's see where we're going now. Are we going to try and climb again? Yeah, we are. Okay. Low volume through here. Nothing in the way of price at the moment, so that's okay. That was the weakness, the reversal. Now we're trying to rally again. That's fine. Up onto 5. Okay, the market fell but recovered. Decent volume under that. It's okay, but not particularly strong. It'd be nice to see that volume a bit higher on that one. Very toppy. Look at the 10-minute, and it's very. You can get these wicks all the time. It's not encouraging to strong moves. And the volume is not great under here. Remember that the volume here is always going to be fairly dramatic when you get the cash markets in. Now we're starting to settle into running both markets in parallel. So we can compare across here. We obviously can't compare out here because this is just Globex. So it's always a little bit tricky as you get started, just getting that metric of what is high, medium, and low volume for the session. We know this is ultra high, but then that's what we expect anyway at the start, because it always is. You get the surge as the gates open.
Right, it's only 4 o'clock, darling. Is that 4 o'clock?
Okay. Yeah, I'm just curious to see if this market's going to break above 27 or not, or it's going to hold it down. And for those cricket fans, I'm just checking on the score on the left, sorry. 117 for no wicket, it's not bad. Okay, here we go. We're going to have another run at it. Okay, nice volume coming in under that one. Really nice volume, very encouraging, maybe even a little bit too encouraging. But going back to what I was saying just now about the comparative nature, you're always looking for benchmarks. And when you eyeball that one, we've got one here, we've got one here. That's the sort of benchmark. That one looked okay. This one's, benchmark that one. That's fine. That's okay. Looks about right. Nothing too scary there. It's this level that's now increasingly coming into play. It didn't look particularly strong, but it certainly came into effect here. So if we can get through 95, then No, we're looking at 27,000 and then probably some congestion around that region. Come off again a little bit. Now we've got the volume point of controls moved up there, coming back down again. It's all a little bit weak. It's not, it hasn't got that strength to it. It's very nervous. So as Anna said, given it's being pushed up by 77 stocks, it's hardly surprising. But there's an awful lot of nervousness around these levels. You can just sense it. Coming off again. Yeah, don't worry. This feels as though it's going to be a repeat of this. That's how it feels to me at any rate. It's just building into a replica of this price action to the left. Wick to the upper body here. It's tested that level held. Volume price analysis isn't just about the relationship, the linear relationship between volume and price. It also brings in support and resistance, which is a key part of the whole analysis. And this has certainly come into play. We can have another go at it maybe. We've got all of this underneath, so this is acting as a very strong platform of support. In terms of stop loss placement, I mean the ideal is down here somewhere at 40, but then 40 points might be too rich, particularly if you're trading this as an intraday scalping trader, probably would be. So you've got to pick out other levels which give you some comfort and some protection in the event of a pullback, and which also fit your money management rules. It's always tricky, and it's one, I suppose, the advantages of trading longer term is that your stops can be that much wider, because they have to be. When you're an intraday scalper, they've got to be relatively tight, and finding tight levels can be difficult. Well-defined tight levels at any rate. So from the perspective of looking at this, you'd want to be at least, well, under this one, possibly under this one as well, if you get away with it, if you're comfortable with that. 10, 15, 20 points on the table. Trend monitor's still blue. It hasn't flickered. Trend monitor's reverted back to blue here. We've gone through the complete array here. We went into bright red, then we went dark red, dark blue, back out the other side into bright blue again. If you're over here, it gives you comfort when you see this going on, because it's telling you that on a fast time frame upstream of you, the sentiment, yes, it was temporarily reversed, but now it's reverted back to your chosen direction. And it just gives you that comfort that, everything's okay. Trend monitor here hasn't transitioned here, hasn't reflected anything here. We're flip-flopping around a little bit down here on 10. I think we'll stick with 2 because that's probably the most interesting at the moment. See if we get another test of this. And remember, every time this is tested and holds, it becomes ever stronger. Got the volume point of control on the 15-second chart. Decent level down here, as you can see, at 74 odd. That held. We've got another level here. And you can eyeball some of these levels clearly. This is a key area here. If we can push up through there. I think we just lost our first wicket. Yep. again. There we go. And what we want to see is a nice push through there, good volume, nice wide candle. You know, something like that would be very handy with some decent volume underneath. Which I don't think it's going to deliver on this occasion at any rate. So we're on 5. Doji candle on the last one. Lots of indecision. And doji over here. Very nervous, very febrile at the moment. Strong level building up here now. Have another run at it. Hard work. Doji on 10 as well. Hit the same sort of level. Down onto 15. Not great volume under that candle. Wick to the upper body. But nice light volume once we get through this region, if we can. Okay, looks like I might have run it now. Trying its little heart out. There we go. I'll just put that on. Okay. There we go. Looks like we've cleared that with a bit of luck. Should hold above that. Now we're going into 27,000. Okay, off we go again. Good stuff. Nice. Okay, that looks good. Yeah, very nice. 15. Okay, here we go. We're off. Didn't pause much at 27,000, did it? Okay, now we're off. Bang. And what's happened? Got volatility. If I had this amount of points in the bag, I'd be out now. Closed out. Done and dusted. That's it. Off to the bank. This may well continue higher, but the mere fact that I've got that on 15 seconds is enough to say to me, that's it. I'm out. Don't particularly want to sit through sideways. If it develops, it may not, but I don't particularly want to. I don't particularly want to take the risk. Lots of volume under that candle as well. Certainly more than I would expect. So we've got volatility, uprush, everyone jumping in thinking, oh, terrific, we're through 27,000, let's jump on the bandwagon. And, the Johnny-come-latelys are in here now and probably regretting that decision, having loaded up. All the other traders, the workaday traders, we've ground up here, we've made some money, and as soon as this comes in, we're out. And they're in. Now we've got more volatility coming. If I want to jump back in, I can. It doesn't cost much. It's fine. And you might say, well, you've just given up 20 points. That's true. But then, I'd rather do that than sit through the expected reversal into congestion. More volatility here. And then, of course, it's a question of looking at what's going on in the other charts. We haven't got any volatility here, so you've got to make that decision. That's a judgment call. We had one here. This is horrendous. Into the congestion, down we go, and on and off. As far as the 2 minutes concerned, absolutely fine, good volume, good solid price action, good volume to it as well. Nothing really to worry about there. No other volatility at all on the chart, so you haven't got anything else. You've only got it on the 15-second here. So you have to make that judgment call. In fact, if I change that to 30-second, let's see if we got it in the 30-second as well. No. So it's only on the 15-second chart. So, if you get one, okay, fine. But if you get it on your primary trading chart, if you're a scalping trader and that comes in, then, that's it. If you're trading maybe on a 2-minute or a 5-minute time horizon, it comes over here, but it doesn't appear here, that's a different debate, different decision making. You might well decide to stay in on that occasion. On we go. More points, you can jump back in. We're now clearing the volatility on 15-second. We've moved down to 30-second. We're clearing that region. Good volume under here. Nothing in the way above in terms of volume. Certainly in terms of volume, nothing in way of price either. Really nice, solid move higher now. And this is what we're seeing on the daily chart. All very nice. So it was a bit of a grind getting there, but now, if we want to jump back in, there's opportunity to make money here. It's really got some momentum. Be interesting to see what the tick chart speed is now. Let's have a quick look at that. So where are we? Here we go. This is on the ES. Well, it's still a bit lackluster, but it's a bit better than it was. We've got 987, 4,000 here, and 2,500 down here. But the difference with the tick chart is you'll see that momentum. You see it on the time chart to some extent, but you don't see it the way it's reflected on a Renko. Or in fact, got the Renko. Where's the Renko? Not sure what I've got on the Renko. Let's have a quick look. Okay, this is the YM on Renko. And it's just, it smooths out that choppy price action. Indicators work in exactly the same way. The trend, I've got the trend dots on here. They work fantastically well with the Renko bricks and also with the trend monitor. The trend dots always change first. They always will because they're very close to the price action. But when you use them with the trend monitor, the trend dots give you a heads up instantly. The trend monitor looks at a more considered view of what is going on in terms of the broader context of the longer term trend, helping to keep you in. And if you use the Renko in combination with time-based charts, it's just a fantastic way to give you a little bit more comfort when you get these pullbacks, which are a little bit more dramatic on a time-based chart, less so on a Renko chart. We're pushing up nicely. We're up to 27,040. Really nice points. What more could you want? This is very straightforward now. Getting into it was a little bit more tricky, but now it's just, making money, building the points, and just deciding where you want to get out. The Renko has two settings. You can either select it off the time-based, certainly in terms of the NinjaTrader version. You either select it off the time-based chart and it will deliver automatically the optimal setting for the Renko brick. In this case, it's 11, or alternatively, you just set it to the brick size you prefer. But if you set it to the optimal, that is then you trading at the speed of the market. You're trading, if you like, in harmony with the market. It's just a great tool. And that's why we call it the Renko Optimizer, because it optimizes the Renko brick size for you in all markets, not just futures indices, but spot and everything else. Just head back onto the charts again. There we go. All very nice. Lovely. Good stuff. Well, what's interesting now is, as you can see here, now we have something significant coming in. We have volatility on 10. That is significant. The principle for slower time frames is always the same. When you see something on a slower time frame, that will always carry more weight than something on a faster time frame by virtue of the fact it's got time on its in its calculation, if you will, in its character. So something on a 15-minute chart will trump anything on a 1 minute, and an hourly chart will trump a 15-minute, and so on and so forth. So when you see a volatility trigger like this on a 10-minute chart or a 5-minute chart, it's significant. Trust me, it's significant. So what you're about to see on the 30-second chart and up onto the 2-minute and the 5-minute will all be coming out of this this indicator here, because the expectation now is we've had volatility, we've had a ramped move, it's very fast move, it's moved very quickly, and now traders are going to be sucked into a weak position. It's the Johnny-come-latelys. They're going to jump onto this move thinking it's a nice, easy bag of pips or points to make, and now they're going to get trapped. They're going to get trapped partly by virtue of the fact that candle has closed off the highs of the session, but more importantly by the fact this is volatility, and volatility go hand in hand with big operators and market makers. So your expectation is the market is going to congest at this point because this is significant. And again, if you had this number of points in the bag, maybe you've got in after 27,000 up here somewhere, and you've got 20 or 30 points in the bag, and this has pulled a little bit of profit out of you. I'll close out, wait for this to clear. Hold on one moment. Okay. And it's relatively straightforward, I have to say. Trading's not easy, but it should be straightforward. And the volatility indicator, amongst all the others, is just so powerful, largely because it triggers in real time. So you don't have to wait for the candle to close. So as soon as this is triggered, as you saw it on the 15-second or 15 seconds, wasn't it? I think, yeah, 15-second, works in exactly the same way, all the time frames. And you know, if you're up here and you're now looking at your 2-minute chart and you're not looking at anything else, you're thinking, oh dear, now what's going to happen next? You know, is this going to reverse, or you know, we're going to go higher still? What do I do? Don't know. Do I move my stop loss? Do I close out? Do I partially close? Gosh, haven't got a clue. As soon as you look down to the 10-minute, tells you what's going on.
It's nice to have a move for a change.
Yes, absolutely. As Anna said, it's nice to have a strong move for a change. Took a little while to develop, but you know, it was nice to see it developing. So there we go.
Well, apparently David's another wicket, and then he's been trading this YM with you.
Oh, have you? Good for you. It's yes, I'm just looking over. It's 147 for 2. Well, if they don't win from there, then you know, there's not much hope for the world. It jolly well ought to. I think I could go out there and bat. But there we go. It's 20 past 4. Sorry, I've gone way over time as usual. Thanks, David. I really appreciate it, and I'm glad you were following that one along. It's you know, it doesn't happen every day. Some sessions here it goes into congestion, as I'm sure you're aware. but it's nice to pick up a decent trade. Took it a while to develop, but certainly nice to see it. But please just be aware of using multiple time frames. And the pound CAD has also broken out. I'm just looking over on Anna's screens, broken out to the upside. It's congestion phases are wonderful. If you've got the patience to trade them, they are truly, in our belief at any rate, the lowest risk sort of propositions you can encounter in trading. Easy for everything, stop loss positioning, confirmation of the breakaway with volume. And it's just patience that required. That, let's face it, we're not good at as traders. We all want to be doing something and not good at sitting on our hands waiting for something to come along. I'm a fisherman, so I'm used to sitting on a riverbank and sitting there hour after hour, not catching anything. Always optimistic something's going to come along. But I'm not that patient for trading, I can assure you. So there we go. Let's just see if we're going to get another move to the upside. And if you've got this and you're in there, maybe you've closed out, now you're waiting for the move to develop further, then it's a question of just waiting for the price action to clear away from this region. And then once it's done that, then markets will calm down again and you can jump back in again, because the cost of trading nowadays is absolute peanuts. It's still looking fairly bullish at the moment. It's just a question of how long it's going to congest in this period here. So at that point, I think I'm going to wrap up. I hope you've enjoyed the session today. Anna's done she's done all the details on the indicators. If you want to drop us a line, always happy to answer any emails you may have. It's anna@annacooling.com or david@quantumtrading.com, and we will endeavour to help you. And we look forward to seeing you next week on, is it Thursday next week? Yes. Thursday next week, same time, same place. So we'll start with the London Forex session at 7:30, and we will see you then. Enjoy the rest of the trading session. Hope this carries on for a little bit longer, and we will see you again soon. Thanks for coming along today, for your time, and we will see you soon. Bye for now.